2017, even the best of the chartered accountants, best of the professionals felt that it is not all that simple. But the way people like you have made it look easy, sound easy, and go easy has been the hallmark of you. So we have amongst us have the UL from ULS, the professor. She will formally welcome you. Over to you, Dr. Rabia. You have joined. So I think she has not been able to make it. Welcome to you, sir. Since she's told me that there's some problem in Amritsar. As we all know that we are all connected pan-India. Over to you, Mr. Gulati. And we hope it's an enriching session.
Just wanted to confirm, can you hear me properly?
Yeah, perfect.
So I would start by thanking you, Vikas, for the wonderful introduction and giving me an opportunity to address you all on an issue, as you said, most people find difficult to understand and have a hands-off approach. I would also thank all the students and other participants who have taken time out to hear us today. I would start by telling you that whenever I have met lawyers, young lawyers, or students of law, they've always said tax is an extremely boring subject. It is extremely technical, and we don't want to practice this branch of law. Having practiced for almost 30 years, I can assure you of something, that this branch of law is one of the most interesting branches of law, because it is inextricably connected with the Constitution, and all the big cases on interpretation of the Constitution have their origins in tax law. That is why this topic which we have chosen today becomes important. And in this particular interaction which we are doing today, I would more concentrate on the Constitution and the aspects in the Constitution which deal with tax law. The reason for that is very simple. Most tax lawyers practicing in the lower forums or chartered accountants normally look at the Act, which is the GST Act or the Income Tax Act or the Sales Tax Act. But unfortunately, importance to the constitutional provisions is not given. In fact, I would want to start this interaction by giving you two examples which are completely contrary to each other. It would be of interest for you all to know that Mr. Nani Palkiwala, the greatest lawyer that India has ever seen, for the better part of his life was exclusively an income tax lawyer. That was his base. But as you all know, when he came to the Supreme Court, the most basic and fundamental cases of prime importance, such as the Keshwanand Bharti case where the basic structure doctrine was laid down, R.C. Cooper case where 14 banks were nationalized and the matter went to 11 judges of the Supreme Court where he succeeded. The Privy Purses case were all argued by Mr. Nani Palkiwala. So a man with a tax background seamlessly moving into constitution law. Now take the reverse case. You would also have heard of an equally famous lawyer called Mr. Shanti Bhushan. Mr. Shanti Bhushan is essentially a constitutional lawyer, a constitutional expert. However, when he came to the Supreme Court, he has been associated with one of the most important cases on tax law. Now, I would want to give you one interesting case fact insofar as Mr. Shanti Bhushan is concerned. And this I am bringing to your notice to show that a lawyer who is ingenious can come up with good arguments, and it does not matter which field he has practiced in. Mr. Shanti Bhushan, at the peak of his career, suffered a heart attack. And when he suffered a heart attack, he had to undergo surgery in the US. When he came back to India and he filed his income tax returns, he filed an income tax return claiming a deduction of business expenses towards his operation. And his argument was that, look, when you calculate my income, which is taxable, I have a total income which I earn. I am permitted to deduct business expenses and then pay tax only on my net income. So he said that since the Income Tax Act allows a deduction towards repair of plants and tools, my heart is my tool or plant without which I cannot function as a lawyer. Ultimately, of course, the matter went against him and the courts did not grant him relief. But the Delhi High Court, a division bench of the Delhi High Court, had to notice that it was an extremely ingenious argument and it had to be dealt with in all its seriousness. What I am trying to say is, therefore, that there is a connection which is intrinsic between tax law and the Constitution. Now, with this, I would start my address to show you how. Now, the first and foremost thing which I would want to share with you is that the power to tax has always been held by all the jurisdictions in the world to be a power which is a part of sovereignty. That is, if you are an independent and a sovereign nation, a power to tax naturally comes with that status. Now, the next question is, what is a tax? A tax, as you all know, is a compulsory extraction of money by the state from a citizen. And if you don't pay, why it is compulsory is if you don't pay, you are liable to penalties, you are liable to even prosecution and jail. So therefore, it is a compulsory exaction. But the only important thing to remember here is that a tax is a general recovery for the purposes of raising revenues for the government. The government need not do anything for you. So if you pay tax of 10,000 rupees, you cannot tell the government as a citizen that please show me the benefit of rupees 10,000 which you are giving me. Now, there is another form of compulsory recovery which is known as a fee. Fee also generically is like a tax. But what is the difference between a fee and a tax? The difference between a fee and a tax is that in a fee, the underlying purpose for recovery is for the purposes of regulation. So if you are entering a public park which is being maintained, the government can levy a fee. So the only difference really between a tax and a fee is that a tax is a recovery for the purposes of collecting general revenue, while a fee is a compulsory recovery for the purposes of regulation. Now, once this is clear, now the stage is set for me to give you an example and then launch into the various provisions which we are dealing with. And the example is this. I'm holding a pen in my hand. Now, anybody who's unfamiliar with tax laws would wonder, which is that government which can tax me? And on what aspects of this pen can a tax be imposed? And would both the governments, that is the state governments and the central government, both be liable to recover tax from me? That is something which is the heart of the Constitution, and it has been dealt with in great detail, which we will briefly run through today to show to you how the governments are required under the Constitution to levy tax and how is the recovery made. And what is the interplay between, therefore, various state legislations dealing with tax and the central legislations. Now, the first article in the Constitution is Article 265. That is where our journey should start from. And if you all have the Constitution in front of you, it'll be nice because it'll be easy then for you to look at those provisions as we speak. Article 265 starts by saying that no tax shall be levied or collected except by an authority of law. Extremely important. So there is a negative mandate which says that if you don't have the authority of law, you cannot recover this tax. Now, the next question therefore arises is, where do the center and the state governments get that authority? That is answered by Article 245 of the Constitution, which essentially provides that the union government has the power to levy tax for the entire country, while the state governments have the power to levy tax within their respective states. Now, one thing which will immediately crop up in your mind is that there is a great degree of overlap, because after all, a state is also a part of the union. If the union can levy taxes for the entire country and a state can levy tax for that entire state, there is an overlap. The union legislation will also apply to the state. Now that conundrum is answered by the next article in the Constitution, which is Article 246. Article 246 is a very important article which you all must read, because it provides for the distribution of powers between the center and the states. Now, you may all have heard that there is a 7th schedule to the Constitution, which has 3 lists: the union list, which is list 1, the state list, list 2, and list 3, which is the concurrent list. Now, all these 3 lists in the 7th schedule owe their existence to Article 246. Article 246(1) says that all the matters which are specified in list 1 of the 7th schedule are to be taxed, or all legislations made under that list are to be made exclusively by the union government. No state can make a law which is a subject matter which is covered by list 1. Then Article 246(2) is an article which says that there is a concurrent list. There are certain subjects in that list, which I will briefly deal with later, which are subjects where both the state and the center have the power to make legislations on. The only difference is that if the union government makes a legislation on that subject, then the state law will be stillborn or will be eclipsed to that extent. There is, of course, Article 254, which says that if the state goes back to the union government and if the president grants a sanction, then in that case, considering the special circumstances of that state, the state law may be allowed to prevail. Finally, we have Article 246(3), which is also a list which contains matters where the state government has the exclusive right to legislate. Now, this is extremely important because in these matters which are listed in list 2, the central government cannot legislate at all, except in certain cases which are exceptions, which I will deal with slightly later. But what is important for our current topic today is that the taxing entries in list 1 and list 2 are provided in entries entry 82 to 92B of list 1 and entries 45 to 63 of list 2. Now, it has been held by the Supreme Court in a number of cases that under a general entry, you cannot have the power to levy a tax. A taxing power is specifically provided for under the taxing entries, and only on those subjects which are provided you can levy a tax. What is extremely significant for us to know is that in the concurrent list, where the union and the state both can simultaneously make a law, there is no entry of tax. There are a few entries of fee, but there is no taxing entry in the concurrent list. The significance of this is that the Constituent Assembly which framed this constitution did not want any confusion or fight between the center and the states on the question of taxation, because it is important revenue and this would have led to great number of problems. But in spite of doing this, there are still problems which occur between the center and the state on these issues, which I will just share with you. Now, for the purposes of our present discussion, we will confine ourselves only to 3 entries in list 1 and 3 entries in list 2. The first entry which you must consider is entry 84 of list 1, which you all would be aware is a duty of excise. So when you manufacture certain goods, it is a duty on excise which is levied on the event of manufacture. This is a power which is exclusively with the union government. No state government can therefore levy tax on your manufacturing a product. Then we are concerned with entry 92 capital A. This is an entry which deals with sales tax. Now, when I sitting in, say, Delhi, want to purchase something from somebody in Haryana, there are 2 states involved, people sitting in 2 states. So this is what is known as an interstate sale. So entry 92A says that when there is an interstate sale happening, it is only the union government which levies sales tax. States have no power to levy that tax. Then the third entry which we are concerned with is entry 92 capital C, which is an entry relating to service tax. Now, in this example of a pen which I gave you, if I need somebody to design this pen for me, now designing costs are essentially in the nature of a service which a designer is offering me as a pen manufacturer. Now, even tax on that designing fee is known as service tax. There are hundreds of services which again only the union would levy tax on. Now we come to list 2. What are the taxing powers of the state? Now, if I am making a local sale, that is, I am sitting in Delhi making a sale to another person sitting in Delhi, for that sale, on the event of sale of that goods, the state government has the power to levy sales tax. Similarly, when I am bringing goods from, say, outside the state of Delhi into Delhi, at the barrier at Delhi, there is an entry tax which is also imposed. Now, this entry tax is also the exclusive power of the state government. Even when goods move from one district to another within the state, again, entry tax can be imposed by the state government. Finally, we are concerned with tax on luxuries, entertainment, and betting. Why I am referring to these 3 entries will be clear to you when we come to the 101st Amendment, where the tax regime has now been altered. The last and the most important entry, which all tax lawyers must be aware of, is the residuary entry 97 in list 1. Now, what is this residuary entry? As I told you earlier, list 1 and list 2 contain an exhaustive list of taxing entries, giving exclusive power to tax to both the center and the state. But there may be a situation where a new type of tax may be required to be imposed, or which is developed in the jurisdictions outside the world, and India may want to adopt that kind of taxation. So this residuary entry is an entry which enables the union government to levy a tax which is not covered by entries list 1 and 2. But what is significant for our purposes is that this residuary entry cannot be exercised by any state government. It is only the Union of India which has that power to levy a tax on a new tax which it may use the residuary entry for. In fact, as a matter of interest, I must inform you that before entry 92C relating to tax on services in the union list was inserted, the Government of India exercised its power under entry 97 of list 1 to make the service tax legislation. And later this entry was inserted in the constitution. Now, coming back to the example of this pen which I gave you, now you would have now seen that insofar as the manufacturer of this pen is concerned, once it is manufactured, tax is imposed on the manufacturer. That is one aspect by the union government. Then when I make a sale, which is either a local sale, in that case, the state government steps in and taxes me on the sale which I have made. Then when I am carrying the goods from one state to another, the other state where I am entering into, that state may levy an entry tax. So we see that different governments at different stages of the movement of this pen from the stage of its manufacture to the place when it finally reaches the consumer, taxes me at different taxable events. These are called taxable events in law. Now, taxable events, because of their mention in the constitutional entries, have been afforded a constitutional status. There is another important element in taxation, which is known as the incidence of tax. Now, what is that? An incidence of tax is, now the question is, at what rate will the tax be imposed? Who will pay this tax? And how will it be recovered? That is what is known as collectively the incidence of tax. That does not have constitutional status because the constitution intended that these aspects are matters of detail And it is left, therefore, to the union government and the respective state governments to provide for these details in their respective statutes. Now, the next immediate question, therefore, which will arise for our consideration is this power which is available to the center and the state, is it an unlimited power? Can they do anything they like? The answer is no. There are constitutional limitations for the exercise of those powers. And this is the next heading which we are dealing with. Constitutional limitations on the taxing power of the states and the union government. The first and the most important taxing limitation, which unfortunately many lawyers do not look at, is in Article 13. I would request all young lawyers and students to look at Article 13 very closely. The first thing you will notice about Article 13 is that it is put in the chapter relating to fundamental rights in Part 3 of the Constitution. And what Article 13 says is that you cannot make a law which is in conflict with the fundamental rights. This is most important because when we say an act or an action is violative of Article 14 or 19, it on its own means nothing. 13 is what is most important because it says if you make a law which is contrary to any of the articles in Part 3, the law would be treated as void and it will be declared as such. The next constitutional limitation is Article 14, which I'm sure everybody is aware of. But I want to tell you that there were traditionally two dimensions in Article 14, which everybody is aware of. Recently, the Supreme Court has added a very important third dimension. So the first dimension of Article 14 is, as you all are aware, that you cannot treat equals as unequals. That is to say, if there are two people who are earning, say, rupees 1,000, you cannot have a law which says I will charge 10% tax from one person and 20% from another person. That's one dimension of Article 14.
Mr. Gulati, you are audible, but still if you could slightly bring the mic closer to you, that will become much better.
Very well. Is this better now?
Yeah, perfect.
Okay. So I have covered the first dimension. The second dimension also everybody is aware of, that a law will be treated as discriminatory and violative of Article 14 if it creates a distinction which has no nexus with the purpose sought to be achieved. That is, if you're creating a distinction, say, between a boy and a girl sitting in the same class, and there is a law which creates that distinction, it must have a relation with the object sought to be achieved. What is the object behind that discrimination? That's the second dimension, and these are well settled dimensions. But as I said, the third and the most important dimension is, which the Supreme Court has recently crystallized, is the dimension of manifest arbitrariness. Let me give you an example. Supposing tomorrow the union government says that for every 100 rupees you earn, you will be required to pay tax of rupees 115 rupees. Now you will notice that if such a law were to come, there will be no question of discrimination or equals being treated as unequals, because if you earn 100 rupees, you are paying 115. If you are earning 1 crore rupees, you are paying 1 crore and 15 lakhs. So everybody is being treated equally. But then this law can be struck down under Article 14 now by using the dimension of manifest arbitrariness. That is, arbitrariness which is so egregious that it shocks the judicial conscience of a court and beats all tests of reasonableness. The third dimension. Now here I would want to bring to your notice a case of the Supreme Court, a constitution bench decision of the Supreme Court. This case is known as Mathuram Agarwal, and the citation, if you want to note it, is 1999, 8 SCC 667. Now, this was a very interesting case which came before the Supreme Court from MP. Now, you are all aware, your parents and you all may have you be owners of houses and properties. You know, property tax is levied on the houses, and property tax in all legislations is levied on the annual value. That is, they create an annual value on the basis of a formula which is provided, and you pay tax at a certain percentage of that annual value. Now, in this case, what had happened was that the legislature there had said that for below 1800 rupees, if the annual value is below 1800 rupees, no rate of tax was prescribed. But it was, if it was between 1800 rupees to say 6000 rupees, the rate of tax was 6%. Then the next was 6,000 to 12,000, the rate of tax was 8%. And finally, at the highest, if the annual value of the property was 24,000 and above, the rate was 20%. But in the act, the legislature introduced a proviso, and that proviso became the subject matter of challenge before the Supreme Court. What did that proviso say? That proviso said that if you have more than one property in a particular area, then all those properties will be clubbed together for the purposes of calculating the annual value. Now, what happened in the Supreme Court was very interesting. This man who filed the writ petition, he had 13 properties, all having annual values of less than 1800 rupees. Now, using this proviso, the state therefore clubbed all these 13 together and wanted to tax him, therefore, at the highest rate of 20%. So the Supreme Court, when it heard the matter, they said this is extremely illogical. Small properties of less than 1800 rupees, you are choosing to tax at the highest rate of 20%, when other properties of 20,000, 40,000 are being taxed at 6 and 8%. And they therefore declared this provision to be unconstitutional. Primarily without saying the words manifest arbitrariness, but using the same principle. Now, of course, you are all aware of the triple talaq case, which happened very recently, where the Supreme Court in Shaira Bano, which is 2017 9 SCC page 1, has now crystallized this concept and has for the first time used, after referring to a number of other decisions, the concept of manifest arbitrariness. And this has subsequently been used now in a number of cases. The fourth limitation on the taxing power is 19(1)(g), which I think everybody is aware of, that you cannot impose a restriction on the free trade and business. However, restrictions can be there under Article 19(1)(6) if they are reasonable. Again, the same principle will apply. How reasonable is the restriction which you are imposing? The fifth limitation on the state's power, and this is very interesting in today's times, is Article 27. Now, what does Article 27 say? Article 27 says that no government can impose a tax for the purposes of promotion of religion. That's very interesting. Now, supposing today the government of the day wants to levy a tax to, say, build the Ram temple at Ayodhya. Can they do it? They cannot do it. They cannot impose a tax because Article 27 is an express fetter, and it says you will not recover taxes to promote religion because we are a secular country. The sixth limitation on the state's taxing power is contained in Articles 269 and 286. And what is this limitation? Because India is a federal structure, and they don't want the federal structure to be disturbed in any manner, they have put in these two articles which say that where a tax has to be levied on sale of goods, which is in the nature of an interstate trade, as I told you, one state to another, or one person sitting in one state purchasing from another state. In such cases, when will that sale be an interstate sale? It is only Parliament and no other state which can legislate and lay down those principles. So your Central Sales Tax Act, which was made, is made considering these two articles. That's the fountainhead of the Central Sales Tax Act. The seventh limitation on the state's power is contained in Articles 287 to 289. What are these articles? These articles provide that the property of the union government cannot be taxed by the states. Further, things like consumption of electricity. If the central government were to purchase electricity and consume it for certain important projects, in that situation also, the states will not have the power to levy taxes. And the last, now we come to the last limitation on the state's taxing powers, which is contained in Article 304A of the Constitution. And I'll briefly deal with this because very recently in 2017, the Supreme Court had to convene a bench of 9 judges, and they have delivered this judgment in the context of entry tax. I'll just explain it to you, where they have overruled previous constitution benches which held the field for the past 57 years. So this judgment, I'll share the citation with you. Its name is Jindal Stainless versus State of Haryana. This is a decision reported in 2017, 12 SCC page 1. It's a very long judgment, 600 odd pages, but I would request each one of you to at least read the majority judgment by Justice Thakur, which is just about 50 to 70 odd pages. And this is a very interesting case because the jurisprudence now has completely changed because of this case. What happened here was that states, as you are aware, you've seen under entry 52 were levying entry taxes. When goods were coming in from another state, taxes were being levied. So initially in the year 1960, the Supreme Court, speaking through a constitution bench, said that, look, under Article 301 of the Constitution, movement and trade should be free throughout the country. That is what that article says. And therefore, the Supreme Court said levying a tax per se would constitute a fetter on the free movement of goods. But later, the Supreme Court, soon thereafter, came out with an exception. And that exception was that, look, if a state is levying a tax which is for the benefit of those traders who are being taxed, then in such case, the tax will be treated as compensatory. To give you an example, supposing between, say, Chandigarh and an adjoining area, you require a bridge. The traders find it difficult to negotiate through dusty roads, so they want a bridge. Now, for making that bridge, they said this is compensatory in nature because it facilitates the free movement of goods. So they carved out this exception. Now, in Jindal, what happened was that in Jindal, the Supreme Court said, no, you cannot say that levying a tax constitutes a fetter on free movement. And the previous constitution benches were all wrong when they said so, because levying a tax is a part of the state's sovereign functions. However, the exception which they created was on the strength of Article 304A, which is a very important article for all tax lawyers to know, which is that a state cannot impose a tax in such a fashion that it discriminates goods of its own state, produced in its own states, versus goods produced in another state. Which is to say that if I am producing some goods in Maharashtra and bringing them to Haryana, Haryana cannot start imposing taxes on that particular goods if it is not imposing a similar tax on its own goods, that is, the same goods being produced in that state. This was again to maintain the federal structure so that there is uniformity and we do not create artificial barriers amongst various states. Now we've dealt with, therefore, the source of power of taxing. Now we have dealt with the limitations on that power. But the third and important question, equally important question is there a limitation? After a limitation, are there any exceptions to these rules which we've just discussed? Is everything cast in stone, or can you tinker with this? The Constitution has been careful to deal with the tinkering and has said that yes, in certain circumstances, whatever we have discussed above can also be altered. Now, what are those exceptions or departures has been discussed in Articles 249 to 254. And I will briefly run through them. Article 249, for example, says that if there is a matter of national importance and the states agree that yes, it is a matter of national importance and they pass resolutions in their respective legislatures by 2/3 majority, they can cede their power or give their power to the central government to make a law on their behalf, even though it is a matter which is covered by the state list, list 2. That is Article 249. Article 250 gives a similar superiority to the union government when there is a proclamation of emergency under Article 352. When emergency is declared as it was declared in the years 1970-71, in that event also the union government takes over all the state's powers to legislate. The third exception is where, for example, there are two states who say we are small states, we don't have the infrastructure, we don't want to legislate on our behalf. So they by consent allow the union government to legislate on its behalf. The next important article is Article 253. Now you are all aware, India as a country may enter into international agreements with, say, USA to create trade. It may enter into a special agreement. Now, in such circumstances also, legislation by parliament can give effect to these international agreements. So even though there may be a subject which is covered by the state list, but the Union of India has entered into an international agreement with another country, it has the power to legislate even on those aspects. Now we are dealing with the last article in this series, which is Article 254. Article 254 is an article which provides that if there are matters in the concurrent list and both the union and the states want to legislate, then the union legislation will prevail. So if the union has not made a legislation, it is free for the state to make legislation on that subject. But if the union comes up with a legislation, then the union law will prevail. There is an exception, however, which has been carved out, which I told you earlier, that you can go to the president as a state and say that, look, in my state there are certain special circumstances, please allow my law to prevail. And if the president grants its assent, in that situation, the state law will prevail. Now with this, we have completed the structure of taxation under the Constitution as it existed till 2016. Because in 2016, a very important constitutional event took place. Now, in the example of the pen, which I gave you, you would have seen the center was levying excise duty, the states were levying sales tax, the center was levying central sales tax, and then entry tax again was being levied by the states. This was leading to multiple taxations. And at multiple stages, people had to file returns under all these acts. Taxes were being levied under all these taxes, and there was no interplay between the taxes. Now, to resolve this situation, the Union of India decided that we must bring in a new tax regime, which is the GST regime. Now, just as a matter of interest, I must tell you, the GST regime was actually adopted for the first time in France in the year 1954. And since then, 140 countries around the world have accepted this regime as the ultimate regime. So we are, frankly speaking, 70 years too late. This should have come in very early, come in now. Now, the point is, the idea behind this was that we should simplify the tax structure relating to indirect taxation. Now here, you're all aware, there is a difference between a direct and an indirect tax. A direct tax is something like an income tax. All other taxes which we have presently discussed fall in the basket of indirect taxes. So the idea behind bringing in GST was that we must have a unified indirect tax. Instead of having these 10 different taxes, let's have one tax. Now, as you are aware, as we have discussed earlier, since the power of legislation for these various taxes were in two different lists, the union and the state list, this GST law could not have been brought into force because it would have meant that the states and the center would not be able to deal with their respective jurisdictions. So in national interest, what happened was that all the states passed a resolution by 2/3 majority of the various legislatures, and they brought about the Constitution 101st Amendment to the Constitution. The Constitution itself was amended, and the date of this amendment is 8th of September 2016. It completely changes the landscape and the manner in which these taxes will now be levied. Now let's briefly discuss what is happening under this regime. Now the Constitution therefore did 3 or 4 things. This amendment did 3 or 4. First, what it did was, we are aware of entry 84 of list 1, which permitted taxes on manufacture to the union government. So immediately, this amendment, first of all, curtails the power of levying a tax on manufacture insofar as the union government is concerned. And this list is now restricted to only 6 matters, which are petroleum products, and that has been done for political consideration. But ultimately, the power of taxation insofar as the power to tax on the event of manufacture is concerned, that's gone. Number 2, what they did was that in the state list, they have deleted entry 52, which was the power to levy entry tax. So the power to levy entry tax with the states is now gone. Then comes entry 54 of list 2, which is a tax on sale. That power has also been taken away, barring 6 products, which are again those 6 petroleum products. And therefore, the states cannot now levy tax on the event of sale. Similarly, entry 55, which deals with taxes on advertisements, and entry 62, which deals with tax on luxuries, has been deleted. Now, the next question therefore arises is, if all these powers have gone, how and in what manner will the states and tax and the union earn their revenues? For that, the Constitution Amendment provides a new tax, which is now called the Goods and Service Tax. This is defined now in the Constitution in Articles 366, within brackets 12 capital A. It defines a new tax and brings into being a new tax, which is now called the Goods and Service Tax. What is unique now about this amendment is that we have seen the source of power was Article 245 and 246, which gave powers to the union government and the state government. Now a new article has been inserted in the Constitution, which is Articles 246 capital A. And please read this article later, because this is a seminal article in the sense that it provides a concurrent power now, both to the union government and the state government, to levy a tax which is known as the Goods and Service Tax on the event of supply. Now, what it now is, it includes everything. It includes manufacture, it includes sale, it includes entry of goods. Any movement of goods from one person to another is now classified as a supply. What is equally important is that in Article 246A, there is a subclause 2 which has been added, which says that if you are making a supply which has an interstate character, which is one state to another, in that case, it is only the union government which will levy a tax and also recover that tax. Similarly, Article 286 has been amended to say that it is only the union government which will define what is a supply in the context of an interstate supply. So therefore, and one more important article, which is Article 269 capital A. Now this is an important article. Why? Because it says that whatever taxes the union government recovers on these interstate transactions, that will be apportioned between the union and the state on the basis of the recommendations of a council which has been created. And Article 279A brings about a very unique mechanism now. It provides for the creation of what is known as the Goods and Service Tax Council. It is like a mini parliament which they have created. Now, who are the members of this council? the members are the Union Minister of Finance, the State Minister of Finance, and all the Ministers of Finance of all the states. So they have all now become a part of this council. And the decisions by this council is taken by a majority vote, and each state has a weighted vote. The Union of India has 1/3 of the total votes in terms of weightage, and all the states have the balance. So all decisions on what goods have to be taxed, at what rates they have to be taxed, how the recoveries will be made are all decided by this council, who makes a recommendation to the various governments, and those recommendations are then adopted in the form of legislation. Now you are all aware that GST started coming in the year, even though this legislation, this constitution amendment is of 2016, the legislations were actually brought into force on 1/7/2017. Now under GST, there are, unfortunately in India, there are 4 types of GSTs. One is the central goods and services tax, which is a tax which has been imposed by the union government. Parallelly, there is a state goods and services tax, where the state governments legislate on the recommendations of the council. Then there is a union territories goods and service tax act, because where there are no states, there are union territories. And the third and the fourth and the important one is the integrated goods and services tax. Now, this integrated goods and services tax is a legislation which is framed by the union government to deal with supplies which have an interstate character, which we've just discussed earlier. The important part insofar as the GST legislation is concerned is that under the GST legislation, what is happening is that if this example of this pen which I gave you, now if I manufacture something, I purchase raw materials, I have to pay tax on that purchase. Then I go to a designer to design, he will charge me something, I have to pay service tax, now I have to pay GST on that. That tax is again paid. Finally, what happens is when the pen is sold to the final consumer, that is known as the output tax. And now the traders are allowed to take benefit of the input taxes, that is that tax which he had paid on his purchases of raw materials, the cost which he had incurred towards tax on the designing fee. All that is now known as an input tax, and that input tax now is refundable to the dealers. Now, what do we mean by refundable? What we mean by refundable is that this is treated as cash in your hands. It is a reimbursement which you get as a trader, and you can use this refund not as cash in the sense that you can't take money from the government, but you can use this tax to pay your other taxes. So you have to pay GST tomorrow at a fresh purchase which you are making. You can use this, so it's like a bank account which is available, where this credit is now accumulated, and this credit is now, you are able to use this credit to pay your other taxes of GST from time to time. There are of course very complex rules which are there for claiming these credits, but we will not go into that question today because that is a separate topic on its own. And finally, what this constitutional amendment does is that if there is a dispute between, say, the center and the union, and between 2 states on the question of taxation, this constitutional amendment has also provided for a dispute resolution mechanism, so that matters don't reach court. It can be resolved internally through a process which the constitutional amendment has contemplated. But as I said, we have, unfortunately, for political considerations, adopted a dual tax structure where the state and the union government are both taxing simultaneously. So now you would notice whenever you go to a restaurant, you will find, or buy some product, in the bill you will find, they will say 9% CGST, 9% SGST, which means that the total tax is actually 18%, but it is divided into SGST and CGST, which goes to the central government and the state governments. But therefore, we have adopted, just like Canada and Brazil, a dual structure where states and center both tax. But all the other countries in the world have adopted a single tax structure where there is only one tax which is imposed. And that tax structure is eminently better because it is simple and you impose the same amount of tax on everyone. Now, since GST is a new legislation, it has also come with its own problems. Just 2 or 3 problems I would like to highlight at this stage. One is, which I have already told you, we have a dual structure which leads to multiplicity of problems, filings, and more complications. The other problem with our GST is the very high rate of taxes which our governments have imposed. And the rate structure which we have in India is in actually 3 or 4 slabs. One is a slab of 5%, 12%, 18%, and 28%. Most of the goods in our country are under the tax structure of 18%. Now, this is one of the highest, 18 and 21 is one of the highest in the world. All developed jurisdictions have a tax structure of about 6 to 8%, in some cases even 10%. But that is the kind of difference which we are talking, which actually leads to our goods becoming uncompetitive. And therefore, goods from China and other countries are cheaper. So the government has to take some action to resolve this issue. The third and the most important issue for a country like India is the third problem which we face with GST is the computerization. Now it is completely computerized in the sense that all your invoices have to be online, everything has to be online. For a country which has an agricultural base like ours, it is very difficult for small traders and people in the villages to deal with this animal, this new animal which has come out. The final issue which we have to deal with is the final problem which I see today as a lawyer is the problem of seeking refunds. So even though the backbone of the GST legislation is founded on the fact that you will get a refund of all the input taxes which you have paid so that our goods don't become very expensive, that unfortunately is being handled very badly in the country because they have made complex rules of procedure and they are denying credits at the drop of a hat. Now the Bombay High Court, unfortunately, in a case has said that, look, this credit which you have is not something which is an indefeasible right in your hand. It is only a concession. But fortunately, the Delhi High Court and the Punjab and Haryana High Court has said, no, this is an indefeasible right in your hand and the government cannot so easily take that away. These matters, of course, have now traveled to the Supreme Court and the Supreme Court will be the final word on this aspect. But this is where we are today. And according to me, the success, and this is the final thing which I want to say today, the success of this new tax regime lies in 3 factors, according to me. One is that they have to simplify the tax procedures for it to work amongst the normal public. Second is that the government has to ensure that there is a seamless transfer of the credit of tax which each trader is in law entitled to. And finally, there has to be a proper implementation and simplification of procedures so that things fall in line and a reduction of the tax rates. This, according to me, is my final submission. And we have therefore today covered the situation insofar as taxes is concerned under the Constitution, both pre and post the amendment. And I would in the end want to thank all of you for giving me a patient hearing and hearing my views. Thank you so much.
Thank you, sir. We couldn't have a much better explanation, and the fact that the people have actually latched upon and they have appreciated it, because we have been holding webinars regularly. As initially I had said that the tax part, the students, the lawyers, the professionals don't easily latch up. But another interesting facet which in the today's session was that we had a stable participants. Invariably, sometimes there is a lot of gate crashing, and the way the people gate crash into as a participant. And they also go in the same way. They just follow the Newton law. For every reaction, there has to be an equal and opposite reaction. But in this case, we had the reaction of the stability. And during the period of lockdown, we couldn't have called nothing more than that. And more so, we are on the Facebook. People are appreciating on the Facebook also. Amongst us, we have Dr. Rabia going to cover, since we are doing this webinar in partnership with ULS. Vote of thanks, and then she would just pitch in her words, then we will go for the Q&A. Over to you, Rabia. Rabia? Rabia, on mute. We are unmuting Rabia.
Hello.
Yeah, Rabia.
Hello. Am I audible?
Yeah.
Yes, yes.
Yes. Greetings of the day, everyone. First of all, I want to congratulate BeyondLawCLC and ULS Punjab University as it is touching the heights under the guidance of Advocate Vikas Chatrat and his team. In this period of lockdown, as we are confined to our places, it is wonderful experience to get immense knowledge from the legal luminaries on different aspects of law. As today we have got an opportunity to get the knowledge from a great personality, Mr. Kavin Gulati, senior advocate, who has beautifully interlinked the crucial tax laws with the Constitution of India. I am highly indebted to Mr. Gulati for sparing his precious time. Your views will enlighten the path of students, advocates, academicians, as well as judicial aspirants. Once again, I want to acknowledge that Mr. Gulati is the famous advocate who has appeared as a leading counsel in a celebrated judgments like Sabrimala, News Portal, Tehelka, etc. He has to his credit various judgments that form a huge literature on the tax laws. Thank you so much, sir, on the behalf of Beyond Law CLC as well as ULS Punjab University.
Thank you so much. Thank you.
Thank you, Rabia. So we will take the questions, but before we take to the questions, I was just reminded of jokes which were floating during the GST because they were very complicated. They said, what could be GST? They said GST can only be good night and sweet dreams and take care. So the question is from Amrinder Singh. Post GST is Article 279A a restriction on the state powers to impose indirect tax. In other words, are the recommendations of the GST Council
Binding. They are binding. The recommendations of the GST Council will be binding.
Dinesh Malhotra. How do you justify the act of government charging 18% under the garb of service tax on interest portions of loan taken on the type of LIC, etc., which are part of savings, and on the medical health policy we all take as basically contracts between two parties, and government has no role on that?
See, we are talking of the wisdom of the government in imposing a tax. That is different from the legislative competence. I mean, the government certainly has the competence to raise the tax. You can challenge it if you want, if you think it is, for the reasons which we discussed, either falls foul of their power or is arbitrary in any manner. But legislative competence they have.
Okay. Ayush, 269 does not provide any power to levy taxes on the export of goods/services. However, the IGST Act allows payment of taxes on export and claim rebate. Can this be said to be unconstitutional since it is beyond the powers under Article 269?
No. Article 269, therefore, as I said earlier, has to be read with Article 286. And when you read the two together, it is absolutely clear that it is only the union which can levy taxes on the exports or the imports coming out from the country. And the IGST part also deals with interstate purchases. That is, as we discussed, sales or supplies now happening between one state to another. So this is power available both under Article 246A as well as Article 269, as we said, read with 286.
Rosie Chahar, input tax refundable comes under the composite scheme or some other provision?
I have not followed the question, I'm sorry.
She asks, input tax refundable comes under the composite scheme or some other provisions?
The input tax is dealt with under section 16 of the GST Act. So you'll have to read the section. It's a very long section and there are a number of rules subject to which you can get that input tax benefit.
Siddharth Shekhar says, what is your take that the states are charging tax on liquor under the garb of Corona cess? He's a bright student from NLSR Hyderabad.
Liquor in any event is a state subject. It is not covered by GST. So each state has that power to levy tax on liquor. And as you said, there were jokes going around during this Corona times that it is the drunkards who are supporting the economy and not the other way around. The government's doing nothing because it is this tax actually which is helping the governments finance its salaries to its government servants. So it's a state subject. It's not covered by GST. The power is available with the state itself.
So Deepak Verma, a bright lawyer from High Court, Punjab and Haryana, whether the state GST directly goes to the state exchequer or with the union, as these days of COVID-19, many states are demanding GST share from the center. What is your take on that?
No, there are two aspects to it. One is the state GST goes to the state itself. But as we discussed, there is, insofar as the levies recovered by the central government on interstate supplies, there is a system of apportionment which is provided for. Plus, there is another provision in the constitution which I did not think it proper to deal with today, which provides that for the first 4 to 5 years, there is a compensation pool which has been created for the benefit of those states which may lose in the recent future as soon as the GST came in by way of lack of revenues. So they had created a compensation pool, and in fact there is an act which levies a cess also for creating the pool for these payments to be made to the states.
So, Ishan Basla says, can you explain the provisions of the occupied field and doctrine of repugnancy in the context of taxation law?
The occupied field is a concept, as we discussed. You would have heard me then when we said is a concept really which comes in when we are dealing with only the concurrent list. Because as you've seen, list 1 and list 2 are exclusive lists dealing with the legislature of a state, and a center will deal with those subjects exclusively. It is only when the concurrent list is there that both can legislate. So once, therefore, the center makes a law, it occupies the entire field, and the state's power, therefore, is ousted to that extent. So therefore, when there is an overlap in list 1 and list 2, they have employed the concept of pith and substance. That is, you have to see what is this law in pith and substance. And if there is an incidental trenching into the field covered by the other legislature, then that incidental trenching is allowed, because in pith and substance, the law relates to that particular field where the legislature has legislated upon.
So Himanshu Kanda, due to financial crisis in the world, due to COVID-19, Saudi Arabia has taken a decision to cut its budgets and increase the tax in their nation. Do you feel that such like situation can arise in India also?
See, this is something which a government has to balance, because what happens is taxes are obviously required because the government needs money in such times. But they have to walk a very tight rope, because if you raise your taxes, what is going to happen is that your business will run out of the country and they will run to jurisdictions which have no tax or lower tax. So a balancing therefore has to take place, and this is something which is very dynamic. It has to keep changing as per the times.
So Lokesh Singhal is from our High Court. He wants to ask a question directly. I'm unmuting Lokesh. Lokesh.
Good afternoon, Kavin ji.
Good afternoon. Good
Nice
afternoon.
to see you. Hope you remember me.
Of course I do.
We had appeared before Justice Aziz Tajdi.
That's right.
I have a question. First of all, thank you for a very informative session.
Thank you.
There is one denatured spirit and one rectified spirit.
Yes.
So denatured spirit, of course, is not fit for human consumption. The state can't regulate it.
Yes.
But rectified spirit, by diluting, can become fit for human consumption.
Yes.
And there may be some industry which is using rectified spirit, but only for industrial purposes, though it can be diluted and can be made for human consumption.
Yes.
Now, whether the state is entitled to regulate the rectified split.
This very issue has been dealt with by the Supreme Court in 2 or 3 decisions. I will, of course, share with you privately once I'm off this, because I don't have the books in front of me. But this very issue came up before Synthetics and Chemicals Limited, that 7-judge constitution bench you are aware of. After that, there were 2 or 3 other decisions. Modi,
Organics and Mohan meetings.
Yes, and all those decisions are there. So I will share with you those details, but it'll take a lot of time to on this web.
All right, thank you. Thank you.
Lokesh is quite lucky that both of you have appeared on the same platform. Otherwise, we are just learning from you. Ayush, how is IGST levied on import of goods distributed between the center and the states? Article 269 or 270?
No, I just gave you that article. That is Article 269 capital A. That is Article 269 capital A.
Okay. Ayush, does India follow the double aspects theory or the doctrine of pith and substance for interpretation of statutes invariably?
That I think I've already answered in the previous question. That taxing entries, there is no overlap, and each legislature is required to tax in its required field. So as we have been discussing the example of a pen, the same pen, the union government can tax on manufacture, sales tax is by the state. So there is no question of an overlap in that sense. Various aspects of the commodity can be subjected to taxation.
Sir Dinesh Malhotra wishes to ask a question directly. I am unmuting him. Dinesh Malhotra. At least during this COVID time, I've started learning somewhat of typing also. Otherwise, I never used. I was always using it for the purposes of
anybody. Somebody has a private question, I would be happy to answer. You can take the number from Vikas ji, and I'll be happy to,
Sir, Dinesh Malhotra is asking the question. It's not an issue. I'm just unmuting him.
Sure.
Dinesh, you can ask him.
Yes, sir. First of all, I'd like to thank you for enlightening us on this taxation purpose, but my question is for the general importance.
Sure.
Again, I'm repeating my question is that as far as the LIC policies are concerned, on one hand, the government says that you will be exempted under the Income Tax Act. So they were right from the beginning to encourage the savings. Now, these are savings which in the end, after 20 years, even whatever amount we get, that is not even equivalent to the interest portion of a simple interest also with the banks give. Now, 18% imposition of 18% GST on the premiums. How does the government justify it? It means it wants to discourage us on the savings. These are our own savings. That is one part. 2. Now, normally in any middle class families, like we all are non-salaried middle class, some are high rich, high middle class, low middle class, and the middle class. Normally, in our families, we are approximately paying 50,000 to 1 lakh premium every year. That is one part. 2. Now, if I take a loan of any kind, even splitting my purchases into EMIs, the interest portion is carrying 18% GST. I have asked so many CAs on this part. Most of them, they don't know. They are quite surprised that this is not being charged. Now, normally the interest portion on the GS on these loans is again middle class families giving 1 lakh premium, 1 lakh EMIs, and the interest portion is again around 20 to 20,000 rupees. The third one is the medical policies, which we invest for the safety. All these are contracts basically. How do they justify covering under the garb of service and take approximately 1 lakh rupees extra from our pockets, burdening our purchasing powers, and not realizing that how we earn the money? This is my basic question. Now, this is for the general importance. So they are eking money from our pockets.
I share your sentiment, but as you're aware, somebody famously said, taxes chase you even after your death. That's the only thing which chases you after your death, because we recovered even from the estate of a dead person. That's the unfortunate part, but that is how things are. And this, as we said, is essentially, a matter of policy, because ultimately you can challenge a tax if it is arbitrary or if it is beyond legislative competence.
Yes, ma'am.
But this is for the government to think, as you rightly say. On the one hand, on income tax, you're giving some deductions
Yes.
when
Yes.
we are dealing with the premiums, etc. But when it comes to service tax, actually in service tax, the tax is really on the person providing the service, though it's recovered from the end consumer, which is us, you and me. So the effect of all of that hammer is on us. But that's unfortunate. But the point is, the government's point of view is that we also need money to, cater for the various government services, for the various infrastructure which we need for our defense, etc. So somebody has to take that hit. That's the.
So so these are self-contradictory, you can say, policies,
I agree, but these are.
and they should be challenged in the general public interest.
Yeah, but the challenge has to be based either on, some fact that it is not competent for the government to raise this tax, or you will say it is arbitrary, extremely arbitrary.
Yeah, this is, according to me, this is arbitrary.
It will
Because even in the latest one is, now the government is offering moratorium period on the credit cards and all that. Now, I just happened to read the moratorium period. Moratorium interest. The interest for those 2 months will be 42 to 48%.
Right.
And assuming that 48% is levied on the 2 months period of whatever credit card payments you have to make or whatever loans you have to make. Now that on 48% there will be a levy of 18%. So the government is not losing its income, the banks are not losing income, and on these 2-3 months we are not earning anything.
You're right, but that is why in the context of contractual law, this aspect of force majeure is playing a dominant part. You would have seen a number of articles and webinars on this aspect. Contractually, of course, people will use that force majeure clause, but in the context of legislation, unfortunately, you cannot use the force majeure clause until and unless the legislation itself is amended to provide for that situation. Like the government has been doing it, for example, in the context of GST itself, there were certain timelines within which you have to file returns, you have to do certain compliances. They've all extended that. Now, even in the context of, timelines under the Arbitration Act, etc., various courts, including the Supreme Court, has passed an order saying that those timelines will be frozen for these period of 3 to 4 months. So these are some things which governments will do. So the best thing perhaps is to make a representation to the government in the first place rather than going to court, because a court will really not be able to help in a situation like this.
Sir, unsuccessfully I made the representation, but there is no response to it.
That we will have to leave to Modi ji, I think.
Sir, Rajiv Malhotra is again a practicing lawyer in Punjab. He will ask the question directly. Rajiv?
Yes. Good afternoon, sir. The question is regarding P.V. Ramanna Reddy, the judgment of the Telangana High Court, and then thereafter it was upheld by the Honorable Supreme Court also. Now, hello, am I audible, sir?
Yes, you are audible.
Yes. Now, this question pertains to Section 70, the powers to summon under the GST Act, and Section 69, the powers to arrest under GST Act. Now, this particular section, sir, demolishes the whole concept of the federal structure. Basically, there is no registration of FIR, and the powers to arrest are directly vested with the GST officers on the premise that the commissioner had reason to believe, and he issued an order to arrest the person who is violating the provisions of the GST Act. Now, my question here is that, first of all, why not the FIR is being mandatory here to arrest the person, one? And secondly, after 24 hours, the person is confined to judicial custody. How it would help in the investigation of the case? That is again another aspect. If they have not to investigate him, and what are the principles and doctrines of the reason to believe, which they say under Section 69, that reason to believe with the commissioner of the GST, and then he may issue the order. How do you rate this as an arbitrary action with the authorities of the GST Act?
Unfortunately, Rajiv ji, this aspect has been dealt with by the Supreme Court also, you are aware, in the context of customs cases also.
Yes.
And they have said that these officers essentially have the powers of a police officer. They've been given police powers. And
Yes.
if somebody were to take action which is not justified or is wrong in the facts of a case, then of course it is amenable to judicial review. And in a few cases, in fact, I have just learned that Justice Muralidhar sitting in your court
Yes.
has in fact
quashed
an arrest in the context of GST in a very recent decision, and he has
Okay.
asked the parties to
At Delhi High Court or in Punjab and High Court?
Punjab and Haryana High Court.
No. While he was in Delhi High Court, he had quashed the arrest, or
While he was in the Punjab and Haryana High Court. This is a very recent. They had an arrest warrant, and they have asked the party to join investigation, put some conditions. So courts do intervene. Unfortunately, the Supreme Court, in a decision in the context of GST itself, had
PV Ramanna Reddy.
Courts did not interfere. But in spite of that, high courts have come forward and have.
Well, sir, sorry to interrupt in between. While you were discussing the dimensions of Article 14 and Article 19(1)(g), and of course Article 13 also, can we bring in the sweep of Article 22 as well, because prevention of detention is another, and Article 21 also, to the GST Act, and go with the
Papa.
Hello.
Segregation of powers with the Constitution में 246 है ना वो? हाँ.
Yes. Hello.
हाँ, legislative powers, state and center.
246 and 246A.
46 यार.
Hello. Am I audible, sir?
Yeah, you're audible. Yeah.
So, can we bring us of Article 22 and Article 21 regarding the prevention of detention here? So much so that the direct arbitrariness and the direct powers of the GST to arrest the person without registration, and you see federal structure is also demolished because police is not involved, and then they have no formal registration of FIR also. Even if they had the powers of arresting, they should have registered the FIR before arresting.
Article 22 will apply when there is a procedure established. If there is no procedure established by law, then things are different. If there is a procedure established by law,
yes,
you have to follow. And if somebody is following the procedure established by law, then Article 21 and 22 don't get violated. Now, in this case of GST, the relevant provisions which you just referred to, is that procedure. But the thing is, if somebody were to act arbitrarily or contrary to that procedure, then you can go to court. But
Mr. Kavin, just come slightly closer to the mic.
Yeah, sure.
Somehow the session is long, I can understand.
Yeah.
Is this
I would not take much. Yes, sir.
I can see Pranav also.
Sir, Pranav wants to ask a question.
Sir. Okay. Thank you, Jatrat Sahab. Thank you. Thanks a lot. Thank you so very much.
It's a joint session of everyone.
Pranav and I will discuss, of course, on the phone privately. No difficulty.
But why Pranav?
Of course.
Just wanted to know, Pranav had posted on the Facebook the question. So I thought I should unmute Pranav, and we can also show that people from Jammu have also joined us. Over to you, Pranav.
But I must have the competence to answer that question also. I don't know what that question is.
No, please. How have you been, sir? How have you been, first of all? How have you been keeping?
Thank you so much, Pranav.
I'm good. A very quick, short question, sir, since we are dealing a couple of matters here together. With the segregation of the powers between the center and the state on the question of levy of certain taxes is pre-GST, post-GST. The segregation of powers continue to exist.
Sure.
Now, if there is an area or a domain which only is being enjoined or possessed by the center, and the state government lacks the legislative competence to legislate on a subject, can the state government do it by way of a policy decision or a policy matter?
In fact, Pranav, very interesting question which you have put. In the Constitution 101st Amendment, I think it's clause 20, which deals, which has given leeway for the laws, even though now they have become illegal. For example, sales tax and excise, etc.
Yes.
They've given the leeway to the states to continue with those laws for a period of 1 year at least, or before they are repealed. So the thing is, there is a lot of litigation happening now. And in fact, the Gujarat High Court has come out with a wonderful decision in the case of Shabnam. I think I'll share the case name with you in a minute.
Right.
Where, this very question was raised. And the Gujarat High Court has taken a view, which I had also argued before the West Bengal Taxation Tribunal, that when the constitutional powers have now been circumscribed, so even though the state may have had the power earlier to make a law, you cannot by an amendment now make a new law. I mean, it is one thing to say that you can continue the law as it is, but the amendment now will have to be made by the relevant legislature, which in this case has to be the union government. I'll give you the citation. I have the citation with me. I'll share it with you. Because it's not been reported as of now. It's a decision of very recent vintage, but I have the citation. I'll share that with you. In fact,
That's precisely the reason. It's always a privilege to. Please, sir.
No, thank you so much. The Kerala High Court had taken a contrary view, but the Gujarat High Court has distinguished that in a very recent decision. It will help you directly.
Certainly. I'm in the middle of a drafting of a petition. Certainly will certainly come handy the information what you provided.
The judgment by Justice Pardiwala with Justice A.C. Rao. I'll just give it. I'll send it to you over WhatsApp.
All right. Thank you. Privilege, sir. Privilege.
Then I will ask Pranav to share with us. We will share it in the group.
Sure.
And as they say, Pranav, Pranav has shown us the key that during the lockdown period also you can unlock your potentials in the other way and take the good use of this webinar. Thank you, Pranav.
Thank you,
sir. Our questions are just coming. We are just asking Gagan Kohli. He practices primarily on the GST side in Chandigarh itself. Last question he will be unmuting, and then we will go for a formal talk, just like our usual pattern.
I think you should invite Pranav, request Pranav also to address you all on tax issues once.
Hearing Pranav would never be taxing. It will be always a pleasure. He's a friend of mine, and it is always a pleasure. So we'll not call him on tax, but we'll call him on other platforms. He's well versed. He's just like a Dhoni. He can play one down. He can wicket, do keeping, do captaining. He can do everything. Gagan Kohli, you can ask the question.
Hi.
Good afternoon.
Mr. Gulati, thanks a lot. You really explained very well. I am audible. सुन रहे हैं मुझे?
Yes, you are audible.
आपने सारा बताया on GST and its constitution and center and state का. I've been practicing इससे पहले central excise and service tax and now GST also. I found now in this COVID 2019 situation, impact of the taxes. मैं ये देखा है कि जैसे GDP है अपनी, that is a total gross turnover of our manufacturing, sale, services, investment, and exports. This if we club together, less imports, minus imports, it is a GDP. अब इतने सारे हमारे टैक्स स्लैब रेट्स हैं 5%, 12%, 18%, 28%. There is a lot of litigation on this classification issues. Then there is a refund. आपने बड़ा अच्छा कहा, refund should be simplified and other things should be simplified. अब जो इंडस्ट्री है जो ये फेस करती है वैल्यूएशन डिस्प्यूट्स, रिफंड डिस्प्यूट्स, एग्जम्पशन के ऊपर डिस्प्यूट्स हैं, ऑन डिफरेंट टैक्स रेट्स हैं और रिवर्स चार्ज के ऊपर है, इंटर स्टेट डिस्प्यूट्स हैं, कंपोजिट मिक्स सप्लाई के इश्यूज के ऊपर है. तो जब ये लिटिगेशन चलती है, एक लिटिगेशन कॉस्ट भी है. सेकंड, इंडस्ट्री हैज टू सफर, अल्टीमेटली इकोनॉमिक सफर्स ड्यू टू दिस फैक्ट. जब कोई केस बनता है या कोई हारता है तो उसको ही हैज टू पे द पेनल्टीज विद इंटरेस्ट. तो उसे क्या नुकसान गवर्नमेंट को होता है कि जो रेवेन्यू अच्छा और आना चाहिए वो नहीं आता, इंडस्ट्रीज बंद हो जाती हैं. तो डू यू फील लाइक कि ये जो अपना सारा सिस्टम है टैक्स लॉस का, दैट शुड बी वेरी सिंप्लीफाइड, कि उसमें जो लेस टू लेस कि डिस्प्यूट्स हो और रेवेन्यू ज्यादा कलेक्ट हो, इकोनॉमिक ज्यादा डेवलप हो. व्हाट डू यू टेक ऑन दिस?
Kohli sahab, I'll answer your question, but Vikas, I am seeing on the chat session also, there is a very interesting question which somebody has put. I think it's Ayush, which says that
Ayush has asked the charging of the tax, the charging tax part, because Ayush has asked many questions. I can read that. Ayush asks,
where he has said that there is no legislative entry in list 1 for GST. How are they coming up with this legislation?
I will do that.
Huh? So
right. Ayush, post that question again.
Yes. This.
Okay. How is IGST levied on import of tax?
Out to you. It says GST does not appear in any of the lists in the 7th schedule. How does the government legislate this law? That's the question.
Okay, I couldn't get it.
Now sorry, Kohli sahab, I'll come back to you in a minute, but I think the answer to this question in many decisions that articles, Article 245, 246 and 246A, which are the sources of power, and the lists are merely fields of legislation. Now, there was no requirement of bringing it in list 1 or list 2 because we saw Article 246A itself, which gave concurrent powers to both the center and the union to legislate together. So the power and the field are both contained in the basic article, which is 246A. Hence, there is no requirement of putting it again in the lists. So that's a very good question. और जहाँ तक कोहली साहब आपका जो observation है, I think it's not a question, it's an observation which you have put, and correctly so. But as I said, this is a matter of policy, less to do with the courts and more to do with planning. It's a poor planning on the part of the government, or a disjointed or disorganized planning, and that is the difference between an developed economy and where we are today, where decisions are not taken in cohesion. They have not thought out those decisions properly, and that is why there are so many pulls. Because frankly, after the GST law, litigation should have been zero. The idea was to create a simplified tax structure, but the way it has been drafted and the way it is being implemented, it is leading to huge litigation. And most of it is because of confusion, because state officers are now dealing with the central law, central officers are dealing with the state law. They themselves are not fully conversant with the law, leave alone lawyers and litigants. So till this confusion is sorted out, it will take its time, but I'm assuming and hoping in the next 4 or 5 years, things will straighten out.
Mr. Gulati, on a lighter vein, I was talking to a friend of mine who's a doctor. I asked, whenever there is a change of season, what do you feel? He said, though the patients become unhealthy, but we amongst ourselves, we always say it's a healthy season going around. And sir, before we finish, just for the participants, those who want to connect with us, they can follow our page on Instagram as well as the Facebook, BeyondLawCLC, for further updates, or join us on 98725-0300.
Thank you.
And thank you. It has been a wonderful session. We have Susanna A. George. She's an assistant professor of law in Riyadh Bara College. A formal vote of thanks, because the students from Riyadh Bara are also joining us like anything. And it has been a wonderful session. Otherwise, we always used to hear jokes on GST rather than understanding the nitty-gritties of GST, which were very complex, but you made it in a lucid and seamless manner. Before Susanna George says a formal vote of thanks, can I ask Soumya Gulati, who has been the backbone of, because we all under this age are chipping in our children to understand how to go about on the Zoom, etc. Soumya, would she come on the screen, please?
I think she's gone offline now.
Okay.
Incidentally, Gagan had wanted that citation. Somebody has been good enough. I think it's Mr. Himanshu Kanda who's put in the citation here. This is 2020 SEC Online, Gujarat, page 694, RIL versus State of Gujarat. This is for Pranav.
Oh. This Himanshu, Sumiti, Ayush, they have all been kind enough. They just post not only post questions, but they also help to facilitate the things in the right perspective.
Yeah,
so convey our thanks to Soumya, who has helped us to move through the session seamlessly.
I will.
Over to Susanna George. Susanna. I'm unmuting you.
Thank you so much, sir, for giving me this opportunity. I would like the time to thank Mr. Kavin Gulati. Thank you so much, sir, for taking up your valuable time for us and imparting your pearls of wisdom to us, sir. Thank you so much for informing us and making us understand the relationship between GST, the tax laws, and the Constitution. It was really informative, and we are grateful, extremely grateful to you, sir, for being patient with us with our queries and everything. Thank you so much, sir. We are extremely grateful. And I would also take up this opportunity to thank BeyondLawCLC for organizing such webinars, which are really informative for all the diverse sections of the legal fraternity, be it professionals, be it assistant professors or the people who are educators, or for the advocates or for the students. It has been a really great platform for everyone to discuss and learn something new during this session when we are sitting at our homes and probably maybe doing nothing and thinking what to do. But this platform has certainly granted us an opportunity to learn and made us understand that whatever the state may be, you should be keep on learning and you should be keep on growing from wherever you can. And I would also like to extend a thank you to all the participants for participating in this webinar and making it a great success. Thank you so much.
Thank you, everybody.
Thank you, Mr. K. Tomorrow's session is at 11:30 on evolution of revisional jurisdiction. From section 115 of CPC to article 227 of the Constitution of India. We would be having on our platform Mr. Shailendra Jain, a designated senior, and Mr. Puneet Jindal, again a designated senior for Punjab and Haryana High Court. You can all join us. And further, on Wednesday, we have Honorable Mr. Justice Madan Lokor and judge from Supreme Court of India who has retired recently, and along with him we will be having Justice S. Muralidhar, who has just joined us at Punjab and High Court. We are on that day but having a different format slightly. You can pose your questions and suggestions because this session would be judicial reforms and a way ahead. How to go about in the COVID times and subsequently. So you can post your questions or suggestions on the WhatsApp number or the email so that we can have this. Thank you, everyone. Stay blessed and stay home. Thank you.
Thank you. Bye-bye.
Thank you, Mr. Gulati, and thank you to Soumya once again.
Thank you so much.
Thank you. And Suzanne also, who has done a wonderful job. Thank you.
Thank you. Thank you so much, sir.